We are officially ready to start. First of all, a huge thanks to all of you for coming and supporting what we're doing here at Falls Fintech. Our cohort has been, shall I say, kicking ass and taking names for the last 12 weeks. And we could not be more proud of everything that they're doing. So huge welcome to all of you for what we've got going on today. So a little bit of a mix-up from what we've done in the past. So for those of you who have seen Falls Fintech demo days and noticed that this one was called Demo-ish Day, appropriately dubbed by me, if you know me, Nikki Rohde, I am all things ish. I'm ish on time, I'm ish on budget, I'm ish on track, and that's why we have Miss Heather Berg. So all those things. So Demo-ish Day is going to be a little different. And what we're doing is instead of taking each founder and saying, come up on stage, parade around for a while, and showcase where you're at, we kind of feel like entrepreneurs need to mix things up. And so that's what we did this time. So we recorded, thanks to our very great production and content guy, Vince Jean. Put it up for Vince if you guys would. Vince recorded a very well-produced, short kind of hype video commercial, virtual business card, whatever you want to call it, for each of these founders. So we're going to play those in sequence and then bring the founders up on stage to chat with our panelists. So we've got a little bit of Q&A time. Each of you will be able to do some Q&A with them after we're done with programming today. For the first time we've done this at Demo-ish Day is a panel of industry experts and payments professionals that have really made their way over the years. So I'm going to let them introduce themselves, starting with that guy, Trent Sorbe.
Hey everybody, I'm Trent Sorbe. I'm the founder and president at Central Payments and one of the co-founders of Falls Fintech with Nikki that we started October 2019-ish. Yeah. So anyway, super happy to be here and happy to share the table with these folks.
I'm Kathryn Petralia, the co-founder of Kabbage, which is it's a fintech company serving small businesses that was acquired by American Express last year. I've been in fintech for a really long time. I've known Trent for 20 years, and we've worked together many times in the past. So it's great to be here, and thanks for having me.
My name's Andrew Wegrzyn. I'm a principal at 630 Ventures. We're based in St. Louis with offices in Singapore and Amsterdam. So we're a global VC fund investing in early stage companies in fintech, insurtech, cybersecurity, and digital health. And really excited to be here, and thanks for having us.
Yeah, so sorry about the mic thing, but hopefully you guys heard that all okay. Experts in the field, venture capital, taking a startup all the way to what we call unicorn in the fintech space. And then, of course, Trent running Central Payments and being an entrepreneur and a visionary himself. So very grateful to have them. Last but not least for my part, and then I will be quiet at least for a while, is a very important message and shout out to our sponsors. So I want to first and foremost thank those sponsors that are in the room that could make it here and fly out. George Sider from MasterCard, would you stand up for us? Give it up for George. I think he went from the Money 2020 show to maybe Dallas, Houston, somewhere, came up here, and eventually we'll see his family again. So really grateful that you stopped by. And then, of course, Miladies and Dane from Discover, if you guys would stand for a minute. They just got in about an hour ago, tops, due to some flight delays. But it's so great to have you guys here as well. So both MasterCard, Discover are great sponsors of our program, along with a lot of others in the industry. Cloud Card, Ubiquity, we've got Galileo, and Dakota State University. They're a little bit closer, but Dr. Roach, would you stand up as well? Dakota State University is known in the nation, really, for having a cyber tech program, cybersecurity, well known in that area. He could explain it way better than me, but thank you for your constant support. And then, of course, the PRFC and Prepaid Payments Program Management friends. That is a tongue twister, but they are also supporting us. And they have cohort after cohort. So as all of you guys know, sponsors are really important to pulling things like this off. So it's really critical. And so I do appreciate from the bottom of my heart you guys supporting everything that we are doing. Glad that you are here. And I will not belabor it any longer. So without further ado, I'm going to first turn it over to a guy that's become a really good friend of mine, Evan Leapart from Kitty Credit. We're going to watch his video, see what he's up to. In a nutshell, they're teaching kids about credit with real world experiences. So check this out.
Did you know that over 91 million adult Americans are considered credit challenged? And when it comes to understanding your credit score in the first place, 4 out of 10 adult Americans said they have no idea how that score even came to be. Hello, my name is Evan Leapart, and I'm the founder and CEO of Kitty Credit. Kitty Credit, in short, is a chore tracking app that teaches kids about credit, where the premise of the app is the better a kid does their chores, the better their quote-unquote credit score. Kitty Credit aims to teach about credit before it becomes an issue. Credit, when leveraged properly, can be used as a tool to generate wealth, ultimately taking steps towards economic equality for those historically disadvantaged. Our thinking is if we teach you about credit before you actually have access to it, you might have better chances at your financial free future. So the way that we're teaching about credit is in your habits, right? So we're doing this through chores. The way that we do this is think of a missed chore like a missed payment, the longer you've had a chore like the longer you've had a credit card, and anytime a kid's ask for something, hey mom, can I get this? Hey dad, can I get this? Think of it like an inquiry. Ultimately, what we're trying to do is create a parallel between solid foundational habits and the mechanics of a FICO score. Our goal is to build a financially free future. Thanks to Falls Fintech's help, we're well on our way to do that. If you want to get more information about us, you can follow us on Twitter or Instagram. It's at Kitty Credit, that's credit with a K, or also Evan Leapart. My last name is Leapart. Thank you very much. Again, this is Evan Leapart, and this is Kitty Credit.
Well done, my friend. Thanks. Mike's all yours.
Vince, first off, I need that video. That was fire.
Okay, I'm gonna start. Evan, can you talk to us a little bit about why you decided to lean in on credit in particular when so many other folks are looking at financial management, and also how you're thinking about marketing to your end customers? It seems like you're going through a B2B2C model rather than going direct to customers.
Yep. Good question. So I started with the concept of credit because it was personal for me. I saw how in my 20s, because I made those common mistakes, you get that card too early on and you just max it out immediately. And then it makes everything difficult for you. I've been a serial entrepreneur. Kitty Credit is my 9th business, my first tech startup though. But everything that I did, credit always got in the way, right? Like I wanted to I had amazing business plan, try to get a loan, credit got in the way. Try to get a home when prices were down, credit got in the way. So I was like, man, I learned about this thing too late. So I've just seen, being around so many entrepreneurs with great ideas, or just people that are really just trying to build generational wealth, credit gets in the way. So I was like, it's tough to save your way out of poverty, but if you understand credit in a proper way, it's a tool that you can leverage. So that was why I took that focus there. But then once the product launched, I was like, it goes out and then everybody will use it. And we realized that a B2C strategy is really tough, right? And especially when you're trying to, through the lens of a chore tracking app, it can be a chore to get parents to track chores. So what we focused was, we need to create something that ultimately ties into what they already know. So that's why we did the B2B2C model. So the partnerships we seek out are after school programs, which is why we have YMCA as a client, or targeting some of the smaller banks, community banks, credit unions. We realize that their challenge right now is they're trying to get younger, and we see this as an engagement tool, so they can customize some of those rewards for their audience. But then ultimately, thinking of who we built this for, it's not an audience that we really wanted to charge an additional monthly cost for. So we tried to find this happy medium that worked for us as a business, and then also worked, for our end users.
Evan, we have heard, those of us that have been around a while, there's plenty of financial literacy stories about companies that saw financial literacy as a way for their entry point into payments. And financial literacy, we talk about it a lot, but the models, the number of companies that have really had significant success monetizing financial literacy are few and far between. What makes you different? How are you going to approach it so that you're around to stay?
Good question. So when you just tackle it through the lens of education, I think it's very tough, right? And I mean, that kind of shows you why ed techs and fintechs have significantly different valuations. What we're saying is we want to get to a place where it's a learn to earn model. We want to actually get to a point where we're issuing our own financial products based off of what somebody's learned. So what we're saying is we use all of these different alternative data modelings for how we're issuing things. Let's make education one of them. So you need to have a law degree before you become a lawyer. Why not demonstrate you know credit before you have access to it? So having that end goal being a tangible financial product is how we see ourselves being different.
I really enjoyed getting to meet you today and hear more about your all's work. I think it really sits at a very crucial intersection in our society. I think one of the more pronounced crises is the student loan debt crises you hear about so much. We essentially give $100,000 loans to consumers who don't even know the basics of how the loan works in many situations. And so, and also the idea of access in terms of financial inclusion, access to a broader and appropriate product suite at the right time as people age and need new products. This is a huge issue for financial inclusion, I think, in general. But just wondering sort of what's next for you all in the evolution of the company, and how you you're hitting on very key points here to, you're essentially helping to form the future generation of new financial technology and financial services consumers, and that's phenomenal. I'm just kind of wondering, how do you see that evolution going forward, I guess?
Yeah, where do we go from here? So Kiddie Credit it's intended for a preteen audience, but through being in this program, like we kind of came in here like, does this make sense for us? Where do we go? We were introduced because of Discover. So we won a pitch competition for Discover, and a lady by the name of Liz was like, you need to check out Falls Fintech. I was like, are we a debit card? How's this? What are we doing? But like, super thankful that we're here because we really figured out how we can make this work. We figured, how do we attack this teen space in the right way, right? Like, okay, so let's say we do our job. You're about to turn 13. You went through our program. You understand how credit works, but where do we take it from here? So the evolution of Kiddie Credit, we've kind of always seen as phase one. So what we're focused on building out is a product that actually works for teens and up. They can actually build their credit. So by the time that they're 18, they already have some established credit history, right? So being an authorized user on a parent's account, essentially that can be done in a way to where when you turn 18, there's established credit history, and it's also it's a secondary tool for the adults as well. So that's our evolution. And then if those two products are working the way that we intend, so Kiddie Credit for a preteen audience, and then the product for teens and up, that's a credit education ecosystem, which we can replicate in markets where credit's either new or non-existent.
Evan Lee Park. Well done, my friend. Awesome. So thank you, Evan. Next up, we're going to look at Greedy. Greedy is some friends of ours that are joining us from Moscow, Russia. So international reach. And in a nutshell, I'm super excited for you to see a little bit about what they've been up to, because I kind of describe it as creating a digital world connection through a virtual hug, as Vicky would describe it. Oh yeah, and with money. So check out Greedy's video.
Hi, I'm Max, CEO and co-founder.
And I'm Vicky, and we are Greedy. Okay, what do we do at Greedy? You know what? About 17 million people are celebrating a birthday on every day of the year. The United States alone has about 800,000 birthdays each day. How do you find the perfect gift for everyone in your life? We came up with a new generation product in present giving. We created an app where people can do the vibrant greetings with the personalized gift cards. Our product is a fun mobile app that allows users to issue digital customized prepaid cards with a sole touch and congratulation for any occasion, and not just for the birthdays. Send your virtual hug to your loved ones and mail their heart from any place in the world. After following the scripts and going through the customer journey, the app will send your prepaid card right to the Apple Wallet, and also will help you to personalize it with your memories from your own camera roll. we created and learned a special AI which recognizes the card image and ensures it's compliant to all the payment networks, all the trademark laws. So we've done a lot. And we quite progressed also with the market development, and we already engaged an army of early adopters, and we do count on their word of mouth. For even more engagements, we will play with the referral bonuses. We gathered a fancy team of professionals in banking and creative workers. We have developed and implemented all the technology stack we need for the app. And we passed the 12 weeks of False Fintech. So our next steps would be implementation, testing, and rolling out loud.
Hi guys, thanks for having us here. Thanks for introduction. Really excited and for this opportunity, guys. Thanks Central Payments, False Fintech, and everyone. And well, yeah.
I could probably kick things off if that's okay. So I'm wondering how this current stage of the company is for you all. I mean, what stage are you at in terms of traction, and what are you hearing from the market in terms of consumer demands or consumer needs? It seems like you're entering at a prime time for extending that personalized greeting virtually. I mean, we've all been kind of living through this for a while now, but ever more relevant now. But I'm just wondering, how has it been so far for you, and how are you sort of taking part in that trend of virtually sort of connecting both personally and financially as well?
Yeah, I can't even imagine the better time for the market. And we actually have quite a big list of early birds for the app. And we also have the engagement with the influencers and celebs to join our marketing effort and showing out the path to the market. And the guys from False Fintech did everything they can, and they did it just great. That we have only to do the implementation process and the project, like a couple of months, and ready to go, hopefully.
We expect to go live in early March, so if things go by plan, and I think it's we've just need to finish the implementation and do the legal stuff, and then we're ready. I think early March next year. Yeah.
So you guys you referenced this just a moment ago. You have a really interesting approach to acquiring customers. Can you talk to us a little bit more about that?
Yeah, imagine like we just had a talk recently with Andrew about the older people like us who do rely on the brand. But for the youngsters, they tend to more rely on the person and the role model and some like influencers, celebs. So we do count on that channel, and we do have some partnerships in there. Besides, if you think about the act of present giving, there are two people, the sender actually and the receiver of the gift. So you like hit two balls with one strike, and yeah, so that's how we're gonna make it.
I'm going off script. Tell me about the influencer or creator partnership that you're most excited about.
We cannot probably name them.
Oh man!
But these fancy people that you all know, and we will hear.
I'm still working out the contractual details.
Oh, Frank, congratulations!
So, Max, you mentioned that you're targeting a March launch. Since I was first introduced to Greedy, I kept thinking to myself, is there go-to-market, because social messaging, obviously not new, virtual gift cards, not new. Put them together, very interesting. There aren't many examples of that. Would you think that your delivery channel is through traditional virtual card distribution, or is your distribution channel through social media and bringing virtual payments along? Do you see where I'm going with that?
Yeah, and I think you're absolutely right. I think we're gonna concentrate on social media, and we have partners. Again, we cannot mention yet the names, but I think this is how we want to approach it, because as you mentioned correctly, the gift card market is huge here in the US, but it hasn't really shown any interesting developments in a way how you get the customer experience, the journey, And at the end of the day, the gift cards are all about that experience and personalization that you try to achieve.
Because traditionally, the gift card, the electronic gift card distribution is a rather sterile process, right? It's not personalized at all, and it almost feels sterile, right? It needs some personalization.
And emotions.
Emotions.
Thank you. Yes, well said.
And then we have our app, plus obviously it is integrated with the social media platforms, and this is the way how new generation, well, pretty much everyone is now comfortable with receiving news, messages, and these are the channels. Yes, and the gifts. So this is going to be integrated and very
awesome,
very interesting. Yeah.
Thank you.
Yay! Thanks, guys. I should actually not be the MC. I should be the MS, the mic stealer for today. But they told me we're on a tight turn. So thank you very much, Greedy. You guys are killing it. My favorite thing, Vicky always talks about fancy, using the word fancy. And I'm like, I need to put that in my vocabulary a little bit more. I love it. I love it. Next up is, again, another guy that's just killing it, Darius Granberry from League Swipe. We're going to check out what he's up to. So all I have to say is, sports fans, holla. He is simplifying the way that you play and pay and, of course, get paid when you win. So check this out.
From betting on how many points LeBron James will score, to paid fantasy football leagues with your friends, to March Madness pools at work. You see, sports fans love betting on sports. So much so, they spent $4 billion in 2018. And by 2020, despite COVID and a sports stoppage, that number ballooned to $22 billion. Let me tell you what sports bettors don't love, though. We don't love having our money spread across multiple platforms. One for fantasy football, another for daily fantasy sports. And now you have a sports book popping up weekly, creating more of a headache? We hate logging in, time after time, site after site, entering sensitive information like social security numbers, taking pictures of our driver's license just to wait weeks for money we've already won. League Swipe seeks to aggregate and centralize, the only one-stop digital wallet that allows you to manage all of your payment activity across all platforms within our single secure application. Hi, I'm Darius, founder of League Swipe, where we get you in the game and paid fast. Now, this audience of sports fanatics present the perfect opportunity to build a payment platform that speaks specifically to them. The incumbents, they all let them down. They all explicitly ban gaming payments on their platform. That's why we're coming in hyper-focused, targeting this overlooked segment. League Swipe will be accepted everywhere you sport. Now, if you're gonna do this, you need to know how money moves, and you can't be afraid of regulatory uncertainty. I'm a 20-plus year finance and accounting professional. I've survived Sarbanes-Oxley as a young CPA. I helped navigate SEC registration and Dodd-Frank as the CFO of a billion-dollar private equity fund. And I've drafted an MVP roster of compliance, payment, and risk experts to join me on this championship run. So I invite you to learn more about how we're changing the way people pay to play the games they enjoy and get paid fast when they win. So follow us on social @League Swipe, or hit me directly, Darius @LeagueSwipe.com, and let's talk more about our product roadmap, or how we make money, and how we're expertly navigating the regulatory landscape. Thank you.
Darius, before we get started, I think your timing is perfect, because if you ask the central payments people out here, I'm about to take all of them in our company fantasy league right now. I am putting the screws to them right now, so the timing is perfect.
I'll make sure you get paid, Trent.
Thank you.
I'm going to make sure you get paid. No, Trent, Kathryn, Andrew, thank you for having me. Central Payments, thank you for the platform. Happy to be here.
I'll kick things off. Yeah. So I guess at a high level, like why now for you all? Why is this the right time for you to take advantage of the market? You know, I think we were chatting a little bit earlier, when we say we meet a company who's in education or ed tech, they don't really want to be a payments company. We meet healthcare companies, they don't want to be payments companies, but everybody wants their payments and their money flows to just work behind the scenes. And with the market growing the way that it is, why is now sort of like an ideal time for you all to strike while the iron's hot?
That's a great question. Why Darius Granberry? Why League Swipe? I like that. So
just some background on me. I've been accounting for how money moves for 2 decades in some capacity as a CPA and CFO. I'm a huge sports fan, and I've been participating in some form of sports wagering, whether it's fantasy football or daily fantasy or now legalized sports betting for the better part of 2 decades. So I really see League Swipe as a marriage of my passion for sports and my professional expertise. So, and the time is right. Legalized sports betting is here to stay. It's expected to be a $55 billion a year market once fully legalized. And the pandemic has only escalated the adoption of digital payments. When you look around, 23 states plus Washington, D.C. have already legalized sports betting, with 8 or so states soon to follow. And online sports betting will be the standard. Like I said, digital payments has become the norm, right? Users enjoy the convenience. They also, when you ask them about how they choose which platforms to play on, the top 2 answers are security, trust in that platform, and how quick and easy is it for them to get their money. 2 benefits that League Swipe provides. And we all know sports fans, we're all looking for a more immersive experience, from how we consume sports to how we bet on sports to even how we experience esports. But as much as we wanted a more immersive experience, we want a seamless experience. At the heart of those experiences are transactions. And we at League Swipe want those transactions to be as frictionless as possible as our users move from experience to experience.
Darius, you're a great example of why we started False Fintech, because we looked at areas of payments where we said, look, we need to learn more from folks that are playing in certain areas, whether that's crypto, whether it's cannabis banking, whether it is legalized sports betting. You're a great example of you teaching us as much as we hope we taught you. And so League Swipe, as we think about where payments is going, you're teaching us along the way as well. My question for you is, and I appreciate your comment about thinking about the regulatory compliance aspects of this. You are in a space that draws a lot of attention, whether it's taxation questions, whether it's licensing questions, whether it's money laundering questions, and all those sorts of things. That's probably not going to go away. What's your plan to tackle that?
Yeah, no, that's a great question. I mean, sports betting and payments together provide such an interesting regulatory landscape. And for the last 2 years, we've really immersed ourselves in the intricacies of the laws that govern our business. During that time, we've created great partnerships with both legal and compliance experts to ensure that we're building our platform in full regulatory compliance and are able to scale as those laws evolve. We spend a lot of time in our home state of Illinois understanding the requirements there, and we have a very pragmatic plan to roll out nationwide. In fact, our partnership with Central Payments is a key part to how we do that.
Yeah, I mean, 51% of Central Payments compensation expense is in what I would call risk management. I'm sure Kabbage was probably very similar as well. So
we just call that losses.
Mandy says we're going to make money in compliance someday. So yeah, look, it's a challenge, but it's not something you can't do. Let's put it that way.
Yeah.
So you mentioned trust earlier, which is an interesting topic. I always believed that people trust you when you give them money. So you're basically doing that. You're giving them money. And so that's a great way to start a brand, but you are building a brand from the ground up. How are you going to approach that?
Yeah,
in a complicated market?
It is. It's branding is paramount. There are a ton of payment and even online gaming players in the market. We think some of the existing players, however, have built somewhat of a combative relationship with this segment, either making it extremely difficult to transact or not allowing transactions at all. So we think there's a huge opportunity for us to come in hyper-focused on this segment, providing a solution that speaks specifically to them. We have a ton of payments experience on staff, from a CPO who's worked at Venmo and Visa to an advisor who's built and sold a payment company to PayPal. So we have some real insights into that world and how to stand out. And we're very intentional on our hires and developing talent. So we have built some great relationships in gaming and have plans to bring on industry veterans who have experience in business development in this arena. And we have a great marketing strategist who has some real experience in this market that's helping make sure we get our brand positioning right. As the lights go down.
I think that means you're not allowed to talk anymore.
As the lights go down. Thank you all for your time.
Got it. Nailed it. Thanks, Sirius. One of my favorite things in working in payments is watching people get super creative and tackling what I call social good challenges. And that's what our friends at TrueCard are doing, looking for alternative ways to create wealth opportunities. In this case, they've created a GBDC, nailed it, gold-backed digital currency, and they explain it on this video, so check it out.
Did you know, in the first half of 2021, 48% of the US investors not only bought crypto and digital asset as an investment, but also they bought it from third-party companies. Hello, my name is Asad Ansari. I am one of the founders and CEO of TrueCard. As the development and demand for digital currencies continues to grow, TrueCard is uniquely positioned to help financial institutions and fintechs grow their business by launching a gold-backed digital currency called GBDC. GBDC is a high-fidelity stablecoin that allows consumers to buy, save, grow, and protect their money from inflation. Financial institutions and fintechs are grappling and are looking for ways to differentiate their core offerings, attract and retain clients, and also identify new sources of revenue. By offering TrueCard's GBDC, fintechs and financial institutions can address their market imperatives. And through our partnership with Central Payments, fintechs will have the ability to allow their consumers to spend GBDCs in real time. Essentially, fintechs can offer a unique savings account that's tied to the appreciation of gold, one that has a far better historical return than the traditional savings account. This creates a win-win situation for fintechs that are looking to drive top-line growth, and also for consumers that are looking for ways to save, grow, and protect their money. Thank you.
Thank you everyone for being here, and thank you for the support, and thank you for the Central Payments team, and also obviously the False Fintech. I also want to thank our extended team member, Dr. Matt Woolard, who has been phenomenal and instrumental in helping us, providing both the outside-in perspective and just general advice. So thank you, Professor Matt. And thank you for the panelists.
So I'm really excited I get to learn another acronym. I have to file that away. I already can't remember what an NFT is, so now I get to add a new one. But do you have a big bunker in your backyard with a bunch of gold in it? Like, how are you doing that?
That's a good question. Yeah. So the GBDCs, the gold-backed digital currencies, are actually backed by physical gold. So the way it's tokenized is 1 GBDC equals 1 gram of physical gold. So what we've done is we've partnered with the suppliers, and we have a wholesale relationship with the gold suppliers. So we buy them, and generally it's a one-stop shop service that we've partnered with. So not in my house, not in my basement, but rather it's being secured and protected by the likes of the banks, so that it's insured and protected from physical security as well.
So you guys obviously plan to generate revenue at some point in the future. How does that work?
For us, there's actually 2 ways of making money. The first is transactional revenue. So every time a consumer buys or sells GBDCs, we pocket small transaction fees off of that. The second, this is where things get interesting, can align with your current company, Kabbage, is we're actually looking to make money off of lending. We're all, at the end of the day, we're all humans, we're all people. Sometimes we have big life moments, sometimes we have sudden surprises. So we're looking to offer, the ability to borrow against GBDCs. So you can use GBDCs as a collateral and borrow against at a very nominal rate, lower than what the annual yield is for the gold. So generally, the annual yield is about 5 to 15%. our ability to, the consumers have the ability to borrow at a much lower rate. Using some of the innovations like around smart contracts, we're able to expedite the approval process.
I have a new acronym, a gold equity loan. It's a GLOC.
GLOC. There you go.
Great. Yes. Thanks so much for the chance to meet you all today and be here. What's really fascinating to me is you're essentially combining a very new idea or newish idea in financial technology with a very old idea, which is like pairing with a physical asset in the real world, right? I'm wondering, what is your go-to-market strategy, and who do you see as sort of your core user or core customer at this stage in the company?
It's been an interesting evolution in terms of go-to-market. But to answer your question, it's a B2B strategy. So primarily fintechs and financial institutions that would later or hence allow their users to buy GBDCs as a store of value and also as a currency. As we go through and learn and get exposed to various experts and refine our go-to-market strategy through the program, we've seen and learned that instead of competing with banks and credit unions and fintechs, it's a better way would be to complement and differentiate our offering and allow those consumers to get the benefit.
Asad, I look back when we were sitting in the break room at Falls FinTech and we had the whiteboard out, and you and I spent some time together and we were scribbling all over the whiteboard, just mutilating the poor whiteboard. And we got done and I thought we came across with some great ideas. Talk about what you learned through the Falls FinTech experience. Did that pivot your business model, and how do you expect to use some of the services that we hope to provide when you guys come to launch?
Yeah, no, absolutely. Great question. And it was, just the last 12 weeks flew by, and we're grateful and thankful for the opportunities and the exposure that we've had. We were able to raise our head and talk to industry experts that were not accessible to us. And because of that, and because of having experts like Trent, we were able to pivot. So initially, our idea was to launch B2C. We decided not to compete with the fintechs and offer yet another debit card, right? So instead, now we're differentiating ourselves, and we're helping fintechs be differentiated by complementing and allowing them to offer GBDC as an offering natively. And this is where the role of the central payments comes in. For us, gold is not just a store of value. We want it to be, as the name implies, a currency. So if someone wants to go to the local grocery store and buy milk with it, we want that to happen. And central payments allows us to make that possible. So you can go and spot purchases through our partnership with central payments. And the second role, Trent, is that we're actually going to launch with central payments. So our go live is Q1 2022, and we'll be launching with central payments. And this allows fintechs and financial institutions to connect to central payments OpenCP platform and offer GBDCs natively. So imagine the art of possible. The integration is seamless. You have less technical debt that you have to worry about. So the entire process is seamless. And for us, it's an easy and a win-win situation.
Good timing. That was perfect. Yeah. Perfect. Thank you, guys. Next up, and kind of last in our cohort, and for those of you that don't know, Falls FinTech intentionally keeps our cohorts to just 5 companies per semester. So we run 2 cohorts a year, 1 in the spring, 1 in the fall, 5 companies in the spring and 5 in the fall. And we do that to create a dynamic that works like this, where it's family-like, it's more cooperative and less competitive. And there's a lot of kind of, synergies that happen in shaping that takes place where, hey man, did you ever think about doing it like this? What would it look like if you did it like that? Or how can I help in this way? And so that's been super fun. So the last company couldn't be with us here today, so we took a little bit of a different spin on their video. But Luke Homan is the founder of FirstRoot. FirstRoot is doing a really interesting approach that's also, to Andrew's point about taking a more legacy-ish situation and bringing it mainstream. And the process is called participatory budgeting, whereby they give kids real money to manage and in turn teaching them how to manage money. So check out the video from First Root.
The financial literacy community has a huge job to do. Build the foundation for a lifetime of financial security, bridge the gap on inequity, and level the playing field for our youth as they enter a world filled with predatory financial practices. Research has shown that encounters with financial literacy start between ages 1 and 2 as toddlers make their first purchase requests. This continues from assisted purchases and first bank accounts to a set of increasingly complex financial experiences that include many kinds of loans and investments and other complex choices. As society changes, the knowledge needed to manage financial resources also changes. For example, non-cash transactions are now more common than cash transactions, and we're seeing new cryptocurrencies almost every day. The impact is that even more skill, self-discipline, and education are required to ensure we make good choices that prepare us for a lifetime of financial well-being. We create the greatest positive impact by focusing on helping students make good financial choices, which leads us to the question, what is the best way to teach good financial decision-making? We believe the best approach is through authentic, project-based, learning by doing experiences that allow students to grapple with real-world issues. Simply put, the best way to teach students how to manage money is by giving them real money to manage. How? Through participatory budgeting, an egalitarian process endorsed by the United Nations, in which students are given real money to collaboratively invest in real projects to improve their school and school community. In participatory budgeting, students establish a theme, create and refine proposals, vote, and then help implement the winning ideas. First Root provides a complete solution for participatory budgeting in schools. Our app supports teachers, students, and parents through every step of the PB process, from planning and ideation to voting and implementation. And you can try it at app.firstroot.co. While our app can be used with any existing Jumpstart aligned curriculum, First Root also provides a unique curriculum based around the 3 pillars of education that support life skills such as financial literacy: knowledge, skill, and disposition. Together, our app and curriculum provide an amazing solution for teaching financial literacy. To learn more, visit firstroot.co.
So I know Luke and I look a bit alike. So we're just going to pretend for a second that I am he. So I'm going to flip the script here a little bit and ask the panelists some questions on behalf of Luke. So I'm going to start with Andrew. Andrew, today we talked a lot about health tech and fintech and ed tech and all the techs out there. So what advice would you have for Luke, who is embarking on the fintech ed tech hybrid?
Yeah, it's a fascinating question because it's an area we've been looking into quite a bit more, ed tech specifically. And so I love that they're deploying into real projects that the students would know about within their school communities, it seems, from what I understand. And so it currently, like, superintendents and administrators are under a tremendous amount of pressure within their districts, not only to educate, but also to manage complex financials of their districts as well, and their schools. And it's fascinating to sort of crowdsource that information into, like, what's the best use of funds for our individual school. Like, you're asking the people who are probably closest to that question, which would be the students. I mean, the students and the teachers, I would guess. So there's that side of things to think about a little bit, but also on the education side, when we talk about topics that include financial inclusion, financial access, it's not always a question of, are these products available? I mean, that is one side of the equation, but it's also, when is the right time for me to engage with a specific product across my journey? And I think we touched on some of these topics before, but there's more, there's an incentive to turn towards what's convenient at times. I mean, there's more payday lenders in the United States than McDonald's locations. And the reason for that isn't because it's a great product, but because it's convenient. Finding it's in my neighborhood, it's easy access. There's On the one side of the product, can be quite predatory or not ideal for a lot of reasons, but on the other side, there are somewhat attractive elements of the product as well. So it's not just having the right product, but it's the right product at the right time for the right person. And I think education plays a role in that, finding out what is that right mixture and when is it the right time for me to interact with different institutions and really maximize for my personal situation.
I think that's one of the things that we've talked to Luke about is breaking through from a point of distribution. You're exactly right. It's through schools, PTOs, and PTAs, and they kind of hold onto their budgets pretty darn tight. And so it's hard to make a way there, but he's got a path. He's got some proven experience in what works all over the world. So Kathryn, I'll flip over to you and ask you, how do you think First Root is able to scale, or do you have any ideas for him on how he can scale when you're trying to break into school systems and budgets?
Well, I don't think there's a parent in this country who would watch this video and say, yeah, I don't want my kid to know how to do that. That sounds terrible. So I think that's a really obvious fit for, young people, for their parents, for their families, for their futures. And you have this really interesting shift happening right now. And this may be a controversial topic, but I'll bring it up anyway. Lots of cities are testing out universal basic income for individuals in their communities, in their municipalities. And so is there this idea that children need the same thing, that children, in order to learn how to manage their finances in an increasingly complicated world, in a world where people lose all of their parents' assets on Robinhood because they don't understand how to trade, in a world where terrible, terrible things happen because people who are uneducated have access to lots of ways to lose their money. I think we would all agree this is a really important societal issue, and perhaps we should invest in letting our children learn by losing and winning and earning actual money. So I think that's maybe something you can plan, and I think you take it to the next step, which is corporations want to have educated employees. It's really important to them that not only their customers are educated, but their employees are educated. So is there a way to get funding from those types of organizations that generally have foundations and things to support education in order to help the pipeline across the entire population of Americans? And that's not really answering the questions about scaling. I think from a scaling perspective, one of my co-founders' dads, I don't think he made this up, always said, you'd always rather be selling like the blue jeans and the pickaxes to the miners rather than out there mining for gold yourself. So from a distribution perspective, you figure out how do you get to those individuals without having to go to them directly, whether it's the schools, obviously, whether it's the companies that are already selling stuff to schools. Maybe it's textbook manufacturers, I don't really know, publishers, people like that who also care about that. But I would figure out who's already in there, who's already ingrained in the systems, that you can leverage those relationships.
That's super smart. Good idea. So Luke, check that out. I think the last question, really, I'll throw it over to Trent. And this isn't just about First Root, but I would say for all of the cohort companies, and including those that have previously been alumni, as a payments guy, the president of our central payments division, what are you excited about? What type of, what makes you excited about the future of FinTech, the future of Falls FinTech, and what each of these folks are working on?
Wow.
Heavy.
Look, I think when we started this, if you would have said through the first 4 cohorts, the first 20 companies, if you'd have said, Trent, how many of them do you think you're going to bring to market? I would have said, if we could bring a third and maybe half to market, that's a win, right? To my knowledge, and I'm sure you guys know the number off the top of your head, but I think 17, Heatherberg, around 17, would you say? I think 17 of the 20, somewhere around 17 of the 20 companies have hung around, raised their money, met the expectations, and are ready to go. So that's a percentage that, I mean, first off, it's a testament to obviously our Falls FinTech team, but it's a testament to the quality of the founders that have come through. And so if you ask me what's most exciting, is that it appears as though with the help of all of our friends and sponsors and partners in the industry, we're really sort of taking the cream of the crop right now through, and that's very exciting for us. It's exciting to think about ways in which we can augment our product offerings in the industry by leveraging companies that have come through Falls FinTech. So yeah, I mean, look, Shannon's over there, she heads up our implementations. And I said, oh, don't worry, it'll only be around a third to maybe half of the companies that'll survive and go. Now we're telling her it's 17 out of 20, and I don't see that percentage changing. So that's been a nice surprise and a luxury for us to have as a company.
And I say that's part of our value proposition at Falls Fintech is because we're part of a full-scale digital payments bank that gives us the opportunity, instead of just providing curriculum and substance and connections, we say we also provide real opportunity, because there's a term sheet, there's a deal that comes at the end of this thing. And so we know that 90% of startups typically fail. 70% of venture-backed startups typically fail. And so 17 out of 20 to making their way to market are pretty good odds. So kudos to all of you. Thank you, panel. Thank you, panelists. Oh boy.
No, it's fine.
Oh boy. Oh boy.
Remember we said, like, we were just...
Remember when? That's what my favorite thing is, when Trent says remember.
Look at this guy, he's grabbing the dials on the mic already. But do you remember we said, like, this is not going to be a fintech petting zoo? Like, this is absolutely not going to be, because that makes no sense for our business to do that. This is about finding the newest, most interesting things and differentiating ourselves in the marketplace. That there's no room for a petting zoo.
All of the founders that we select, people often ask, how do you select who you select? And I said, honestly, we absolutely put more skin in the game of the founding team. And so a tribute to all of you for being hungry and hustling and being humble. That's one of my favorite attributes in people. Assad, we've talked forever about the journey, and it's all about the journey. You win some and you lose some. And so it's been such a ride to do this with you guys. And so I thank you all. I thank you, panelists, for your time, for flying in to be with us. And so put up for the panelists if you could.
Thank you.
Thank you so much for everybody for coming. Thank you, Remedy. Seriously. Great venue, great beer. Whoop, whoop. And just overall appreciate your flexibility as we kind of crowded your space and said, hey, we'd like to put cameras here and lights here and things here and move your tables and add food and all the things. And they were like, whatever you need. So, so thank you, Remedy. So I thank you guys all very much. I thank you to the sponsors for coming in. Trent, some closing words.
Love this time together, of course, but let's just hear for the False Fintech team. I mean, I want to hold up Heather and Luke, and of course my counterpart here, Nikki, and the quality of this program. I think it's the best in the country. We spend a lot of time with fintechs. We spend a lot of time with fintechs telling us about other accelerators. And, I'm just so appreciative for this team and their dedication. So I just wanted to say thank you.
Thanks. It's mostly Heather and Luke. Let's be honest. No.
She's right.
No, it's absolutely great. So look, we have this space for about another half hour. So I encourage you guys to stay, mingle, have another drink or 2 or 3 or 4 or 5. And
Luke,
then,
hold up the drink tickets.
Luke has drink tickets. Luke has more drink tickets. And each founder will be at respective places with a table tent. So if you heard some things and you, as an audience member, wanted to ask some questions, just stop over and ask your questions, talk with them. They're the most wonderful people on the planet. So mingle, drink, eat, and enjoy. Thank you, guys.
Thank you so much.